can the United States or any country infinitely run large deficits that have to be funded by bond sales?
Doesn't this just turn into, I'm lecturing a child, don't break the toy, don't break the toy,
Right.
because when the toy breaks, you're going to cry about it.
To reduce the government deficit, then that inherently causes austerity to the private sector, to individuals. And I'm not sure people are willing to take that pain.
I guess that's the big question is, what does the failure state look like?
Humans are going to keep borrowing. They don't want to have austerity. And then eventually, every 50, 100, 150 years, you have to have some sort of jubilee where we burn the tally sticks.
That's the fundamental disconnect, is that we have, through our collective bodies, decided we don't want to pay for the things that we want. I think part of the issue that I think you're hitting on, Jason, is just the numbers don't work, right? You can't cut enough from the things that can be cut.
Peter Atwater said FX is a sentiment gauge for all policy decisions right now. If you want to see how policy is actually being viewed on the global stage for resetting cost of capital, just watch FX on the announcement. Those other finance podcasts, they're clickbait, but this is clickbait. Ground rules: 1, before we start, the group of us agree on a pre-discussed topic. Number 2, while we're live, nobody Googles nothing. Number 3, we each bring a surprise topic to the table. The mission is simple. If we as professionals have to talk to people in the real world all day, shouldn't we also share how we talk to each other before and after those conversations? Probably not. This is a terrible idea. This is the 4th time we're doing this, and we haven't quit yet. So, as the philosophers of the great salon operation Ivy once professed, all I know is that I don't know nothing. Let's click some beta. I'm Matt Zeigler, joined as always by He Can't Start a Fire, Can't Start a Fire Without a Spark, our resident winter mute for hire, Mr. Neuromancing in the Dark himself, Dave Nadig.
Neuromancing in the dark. That's good. I'm going to
brilliant.
steal that one.
That was
That's
brilliant.
You've had me on a
good.
cyberpunk kick. I owe you for that. And the man whose Minecraft movie review reads, and I quote, "Of course the boomers want to sell this to their grandkids. I'm only surprised they didn't spell Minecraft more like Mein Kampf. You play video games, send us your money, and don't ask questions, because with Jason Momoa and Jack Black as our Gen X heat shield, your parents are as helpless as the rest of you." Please and buff. Welcome to the show.
Wow.
Oh my goodness. Have you seen the Minecraft movie? I haven't seen the Minecraft movie.
I haven't. I don't know if I will.
I
Will either of you see it? Do you have a reason to see that movie?
It's not like
I mean, it's got Jack Black in it. Who knows?
Did you see Jack Black do SNL the other week? Like, I don't know, a month ago or something. The best part is he the opening monologue, he's got like, there's a marching band. He does it with the Please Don't Destroy Kids, I think, helped him like set the whole thing up. I say kids, they're like 30 years old. But he does this thing, and there's a part where he like runs up and down this flight of steps. And my wife and I were watching it. We were like, damn, like that's ambitious. So then he was on the David Spade, Dana Carvey podcast talking about it. They were both like, damn, you went up and down those steps. And he was like, I thought I was going to die. He's like, I made the wrong choice. And I was so winded running up and down those stairs. What I felt like in the moment.
2 Jack Black anecdotes. One, all I ever think about is the banana hands from Shallow Hal when he meets Tony Robbins.
Oh, absolutely.
Especially with Tony Robbins always writing books about finance now. That's all I think about is banana hands. And then isn't there something like his mom like worked at NASA or something like that? Like he has some weird family.
There's some
lineage.
crazy, like his family, somebody's literally a rocket scientist.
Yeah.
I feel like I know this too. I heard this.
Yeah.
Which, good times. Perfect segue.
Perfect segue into other mistakes people are making.
Yeah. Never forget, big is beautiful, and never ever forget, we have a self-proclaimed big, beautiful tax bill. Because taxes are never sexy, but big and beautiful, sure. Dave, starting with you, can a country like the U.S. ever, under any circumstances, get their proverbial shit together, and why is the answer no?
I mean, look, I'm not a big fan of this administration, which probably put that political bias out there. But I mean, come on. Like, I thought, like, if you're gonna be the bad guys, at least do the bad thing. Like, at least cut like crazy and get the deficit. Like, if you're gonna put us through all this pain, please let us actually get some result from it. And everything that I've processed so far, this seems like all of the pain and a little bit of gain for a few people. And that just doesn't seem, I don't know. It doesn't seem like it's actually going to accomplish any of the things that anybody actually wants to get done. So Jason Buck, tell me why I'm wrong.
I can't tell you why you're wrong, but like this is to me is like I think it was just another win for DC and the political process in the sense that like they're fighting back against Doge and whatever else, you know, the administration wants to do. Is that politicians are going to be politicians at the end of the day, and I think they underestimated how difficult it'd be to turn that cargo ship. And so I think that's what they're dealing with more than anything, is that I think some people call it like the black pill of the beltway, right? Like it's impossible to turn that ship around, whether the short term or the long term. But in a sense, like when we lead to this question, I was curious more about, I think it was Dave, I think it was you that had in our text chain, it was like, will the U.S. get its house in fiscal order? Can you just frame that for me? So then maybe that's part of the discussion. Like, what does that even mean?
Yeah. So, I mean, can the United States or any country infinitely run large deficits that have to be funded by bond sales? I know that this is sort of a foundational MMT argument, that we can talk about Japan, and I'm not an economist, so I'll get all those things wrong. But, as much as I love guys like Colin Roach and Stephanie Kelton, and who are like hardcore on the MMT front, it does seem like at some point there have to be implications for spending money you don't have over and over and over again. And I say this as somebody who's fundamentally a tax and spend leftist. It's like at some point that seems like it has to matter. It feels like during COVID, we sort of poked the edges of it. And I was sort of encouraged by that. It was like, oh, okay, we ran inflation up to a 9 print. That seems like a natural response to everything we just did. I'm sort of baffled why there isn't more discussion about that piece of it. Why almost all of the discussion comes down to just we have to cut spending, we have to cut spending, we have to cut spending. And there's really doesn't seem to be much discussion of tax policy in a real sense, right? We talk about it, it gets bandied around, but at the end of the day, nobody's talking about getting rid of any of those tax cuts. We're talking about how can we cut more.
Okay, so MMT aside, and for the people who are going to respond and put in the comments explaining this to
Let's get the hate out fast.
Get the hate out fast. Like MMT, at the end of the day, we're talking about jobs, and we're talking about trade, and how that influences the different capital accounts and everything else that goes. This tax bill kind of feels like we're addressing the job side. We're addressing what the politicians need to do that feel like they need to get reelected, or how they want to frame their pitches. But there's not a lot of trade in this thing, right? Like, there's this idea of, in this like weird closed little ecosystem, to your point, we can continue to run up the debt. We can deficit spend on some of this stuff, but let's give the businesses enough of their tax cuts. Let's extend enough of the stuff that we need to extend. Let's keep the reasons to be an S-Corp, if you can be an S-Corp, like, in place. And let's let the tariffs and all that other policy exist outside and away from this bill. It feels like we're insulating away from that argument with this. Do you have that read, or is that hitting you in the same way?
Dave,
I mean, it's definitely the case that you're correct. There really is no tariff policy in any of this. There really kind of couldn't be, although
Not that there should be.
The rules, I'm not sure how much the rules matter at this point anymore. But, theoretically, for reconciliation, you're not supposed to be doing things like putting foreign policy stuff in it. Obviously, it's all weighted in there now. But you're right. Like, there's no movement from Congress here to like have trade policy be a part of this. This seems just a sort of tax and spend bill for reconciliation. So you're right. We're only dealing with a corner case, right? We're only dealing with these edges that can fit underneath this umbrella. But it just seems sort of like I guess you have to believe that the only thing that matters is keeping people who are wealthy, and therefore business owners and employers, as happy as possible. And nothing else matters. That's what the bill feels like to me.
Oh, I
Wasn't that politics?
That's how you get reelected, right? Like, yeah.
All right, that's that simple.
But maybe this will help for framing, because forgive me, I'm just a dolt, and I try to think about this very simply. Is like, I think what we're talking about initially, that's what I was saying. Can you frame it for me? What does it mean to get our fiscal house in order? And sympathetic for MMT or monetary operations, in the sense that, like, if we're assuming that taxes and selling bonds is what raises the money for the government to spend, and then therefore we're running a deficit. So you have to swallow that, I guess. Is that how we figure out the double entry bookkeeping? Is that how we're starting to figure that out? Like, that's what I'm saying. Like, what does it mean to get our fiscal house in order? And then when you said, Dave, like, you can't run deficits forever. And, I think our honestly, our knee-jerk reaction always is to think about our own household spending, right? And like
right. Which I know is
right.
false.
I know you do, but like I fall for it all the time, even though I know it.
Yeah.
Like, I can't help. Like you just said, like, similarly, I go to all those people. I go, yeah, but can we run it on forever? What's the percentage? 3x, 4x, 5x, GDP. What is that number?
And doesn't this just turn into, I'm lecturing a child, don't break the toy,
Right.
because when the toy breaks, you're going to cry about it, but I'm just pontificating, don't break the toy.
But what does it mean that the toy breaks?
Does anybody know?
I mean, I guess that's the big question is what does the failure state look like, right? Because I don't think you can say 9% inflation was the failure state. You can probably look at, other countries that have had crazy hyperinflation moments, whether it's Zimbabwe or, in Germany or, you can pick all the historical examples, which I don't think are that relevant because we live in a different world.
No, but then doesn't it just feel like the U.S. becomes, this is the tax policy you set up as a baby step to something you raised and got lodged in my head, Dave, maybe on the first one we did? You're like, this is just baby steps towards a VAT. Like the U.S. at the end of this becomes a smaller country. That's how the house gets, I don't want to say in order, but that's how it gets reordered. And then we just end up necessitating like a VAT to solve for the problems of trade around what otherwise is just a business-friendly tax structure.
Do you believe that this, like, we'll end up with some version of something like this that actually is passed and signed? I think I'm not a big believer we're going to run off a cliff and the world's going to end. Like, the things always manage to get solved at the last minute, and it will still have an enormous amount of spending in it, and it'll still have all these tax cuts in it. It'll just be somewhat different in a way that's palatable. So we're going to have some version of this. Do you see in this a push towards getting everything back to the states? It feels a little like that. Certainly a lot of the things like the Medicare cuts have that quality of like, hey, if Vermont wants to take care of its own people, Vermont can pass its own rules and raise its own money to fund healthcare or whatever, but there's a lot of precedent for. I live in Massachusetts. We had universal healthcare way before Obamacare came around. So like states do that. But at the same time, we've got a lot of federal levers that feel very much like getting in states' ways because we got threats from the government for California and Maine and everybody else about do it Trump's way or you don't get federal money. Do you have Jason in particular, like, do you have a vibe check on like how that's going to pan out? Like how do you see that story evolving? Is this a states' right and small government story, or is this just going to be more pork, and we're just going to roll over on this and there isn't a big phase shift?
We think like pork forever, right? Like it's just more bacon all the way down.
Bacon. It's just bacon for everybody.
got
as far as the eye can see.
I also got distracted for a second. For Massachusetts, wasn't that Romney that got you the universal health care?
Yeah, Romney.
Yeah, good. Thanks.
Love Romney. I'm on it right now.
That's good. Guys in there.
Right. 99%. Forget that 1%.
Yeah, exactly. Yeah, I think part of it, like, I think we've been moving towards states' rights even from the first Trump term, right? That was the zeitgeist. Our Overton window is moving much more towards state rights, and maybe that's part of it. And you can even say, that's part of this, I guess, push towards a form of manifest destiny again for the United States is like a lot of that stuff is becoming much more local and hyper-local, so it could be pushing it down that way. Yeah, I don't think you stop politicians from spending. Does it get pushed down the state level? The problem, as you know, though, at the state level, that's when household spending does matter, like in a household balance sheet, right? But at the federal side, it doesn't matter. But if states are backstopped by the federal government, then it's kind of irrelevant. But they're the ones that can actually default at a local or state level, where you can at the federal level. So,
right.
There's limits to pushing that down to the state side. But more, I would just, push that more towards Matt, because especially Matt likes to be a very Homer, Pennsylvania, Eastern Pennsylvania kind of guy. Is that what you'd like to see is much more local than federal?
So I'm going to use like a horrible example that I want to see policy help solve. And that's around, this goes back to the labor part of the equation. If you want to help solve labor on the local level, you got to create the right incentive structures for people to not go out and just figure out ways to offer jobs, but make those jobs be something that people want to do. And part of that might just be raising the wage. Like you might not be able to get the teenager to work at the local. There was one restaurant in the town we used to live in that was open 7 days a week. And so that was like a local gathering hole for lunch through dinner. And on Sunday or Monday, when every other place was closed, it was reliably open. And they can't get enough workers to stay open 7 days of the week. And it's always the same cast of characters in there. So now they're open 5-6 times a week sometimes, but they can't do 7 anymore because according to the people at the counter, and trust the teenager handing you pizza and wings on a Tuesday as much as he will, they can't find people to work. And I have to believe a big part of that is just what's the incentive structure or the tax structure that says let them increase the wages because they can't just pay somebody. We're still a what, 725, 750 minimum wage state. So it's just what's the incentive structure that says like that's a restaurant that serves an entire community where lots of people have kids and teenagers in that community, and there's no reason why some of those kids wouldn't want that job.
Wouldn't it be incumbent on that?
How do we help solve for that?
Yeah, that restaurant has a
that's the
clearing
market.
price, right? Like that's that they have to do right individually.
So what's the right way to help businesses facilitate the labor clearing prices in some of these markets that are detached from the rest of the national reality? And just if that place gets a tax cut and incentive program where they can pay more for labor or something like that, help solve these problems that are work at the local and the local level that aren't McDonald's across the street who has no problem staying open 24/7 because, Medicare and Social Security can help provide their workforce with the ability to work part-time shifts.
I mean, I think the McDonald's example cuts to the meat of this problem, which is we live in this late stage capitalist world where we've gotten very efficient at things. I mean, from a calorie delivery perspective, McDonald's is a freaking miracle, right? Like the amount of calories one can purchase through McDonald's in a particular quality zone at consistently around the world, at extraordinarily cheap prices. Like that's not going away. Their cost structure may change here or there, but the efficiency that they've learned on how to run a restaurant business in a local community is never going away. They'll only get more efficient. The problem is your local joint is never going to have that efficiency, right? For the 14 people who are going to be hanging out there on a Monday night at 3 a.m., they need to have 3 or 4 people there, right? You got to have somebody at the front. You got to have a guy in the back who still knows how to cook. Maybe you got one person who's also serving. McDonald's they've got kiosks and, I've been to a McDonald's that is being run by one person, right? That does happen, if you go to the right place at the right time. I don't think those efficiencies come back. So I think it's much more fundamental than this. I think there really is how do you allow for slack in an economy again, where not every point of delivery is maximally efficient?
Well,
that's a great point.
Yeah, there's so many good things in there. I think the analogy, right, is to Matt's local restaurant is like the Walmart or Costco coming in, right, and disrupting the mom and pops. And like Dave's saying, it's like they create such economies of scale and such efficiency that it's turtles all the way down in the sense that the end consumer wants to pay less, right? That's why, like Dave's saying, it's amazing how many calories you can get from McDonald's for 99 cents. Well, if I go down the street and it's $2.99, there's trade-offs there for me and family spending, right? So it's like, it is not necessarily like Walmart or McDonald's are bad. It's like the consumer wants to pay less too. That's part of this whole tariff policy coming from widgets out of China. And then, like you said, do we need slack in the system? And going back almost like when you said the 9% inflation at COVID, right? Was that really just a one-off demand pull inflation, right? Like, and this is what COVID, made us all start to consider supply chains. But I wonder if that's an aberration, right? Like we do like this just in time. We do like these efficiencies and like we do like to pay less, and trying to get people to pay more is difficult. But at the same time, Matt, I'm glad you brought up restaurants because you guys clarify this for me because I haven't looked at it in great detail. But, you had the no taxes on tips in restaurants, but I believe that has a sunset clause of only like a few years. And then secondarily, maybe it's just me and, even though I came up working in restaurants and everything is like, now though I'm supposed to subsidize the owner's pay to the employees through tips, like now we're just going to move more towards tips. Like, as you know, the tipping culture has gotten out of control in this country, right? And we're subsidizing all of the minimum wage by our tipping culture.
The tax on tips thing, I think, is particularly interesting because it's one of those, it's got way more layers on it than I actually thought it did when I started trying to chase that down. My initial reaction was 100% yours. It's like, great. Now all of a sudden we're going to pay, every server is going to get $1 an hour. And the expectation is they're going to make $20 an hour in tips. The challenge there is that in order to have your tips not taxed, you have to report them and your employer has to actually pay payroll taxes on them. Yeah. So there's this weird scenario where no tax on tips may actually increase the amount of payroll taxes collected, because now all these unreported tips are going to get reported above the line. And yes, there won't be income tax collected on those, but that 7.5, whatever it is that comes off the top, will start getting collected. So for a traditionally cash heavy business, I could see how it goes the other way. It does strike me as weird to start creating these little carve outs for how someone gets paid versus what they get paid or what they get paid for. So that somehow like a tipping profession is literally different kind of work versus every other kind of profession. That strikes me as bizarre. And I'm sure there are going to be unintended consequences if something like that becomes not only part of the code, but really used. To your point, Jason, if it becomes like this push towards everything becomes tipped and everybody finds all loopholes, that's going to create weird behavioral consequences that I can't even predict.
Well, like you said,
And as the restaurant owner,
Yeah.
all you have to do is lower your salary, file as an S corp, and then when you pay the profit distributions, you don't have to pay. 15.3% goes away. It's a dividend. You're good, man. We don't have to do that.
I love it. I think they
Sorry, Jason.
No,
what,
sorry, I
what do
think-
you actually want to do?
I think Dave was saying also they had to put those other restriction caps in there because people were afraid that like now plumbers were going to become tipped only, right? Like, it was like, hey, $10 for the
No,
plumber.
like they're pretty good restrictions.
Suggested tip $500. I love the quote unquote unreported because I assume all three of us came up working in restaurants, and as you know, at the end of the day, when it came time to report tips, I'm going to use this. I'm not trying to self-incriminate any of us, but it was like you said, the first thing I saw when they said no tax on tips, I'm like, oh, they're just trying to find out how much people are getting tipped because they've never had an accurate number.
They don't know. Right.
So like maybe there's like a positive side to it. And mostly it seems like one of those things that was good to run on, won't actually matter. Like I don't think anybody's going to be like, I'm going to vote for this guy again because he cut the taxes on my tips. By the time all this stuff rolls around, I think that's going to be just noise for everything else going on in the electoral process. So mostly it seems like a lot of paperwork that's not really going to move the needle very much.
I think the best part, big air quotes, best part about this is a lot of it is not a real change for most business owners, operators, and other people. So the best part about this is that we've got what's been in place for 8 years is more or less being continued into the future with some weird, details around the edges. And just that part alone is while we're trying to deal with tariffs and all the other crap that's going on that we don't have any policy decisions on, it's like, all right, I don't have to I restructured as an S corp 8 years ago. I don't have to go and undo that. Or I don't have to totally rethink this thing. And maybe some of my capital allocation strategy can be fidgeted around with a little bit now that the SALT deduction is being raised a little bit. Now that some of the other stuff for kids' education. If you have a little bit of money, you got a little bit more wiggle room on how you plan with this stuff. And maybe not everybody's evil and figure out a way to, keep the local restaurant open is basically my hope. But
Was there anything
my faith
else?
in humanity is.
Was there any other, before we get back to like fiscal house in order, was there anything else specifically that jumped out at you guys that you've kind of looked through or started to dive into?
In the tax bill?
Yeah.
I mean, being the bleeding heart that I am, like I look at all of the, aggressive cuts and things like Medicare, the work requirement thing, which is one of those classic things that always sounds obvious and straightforward and never actually works. Like all that stuff just annoys me. Literally every place that has done heavy work requirements for any social services, they've always spent more money in the United States, more money administering the work requirement problem than they spend out on the actual services. So we know it doesn't work. It just creates barriers. So, that just, I find personally sad and cruel. And like, I don't, it's hard for me to get behind that. But on the other side of my mouth, I can also say, but you got to start cutting stuff somewhere. And I understand that. And I understand that, federal government is often a very inefficient way to get things done like this. My problem is that I think that resetting the social safety net is a fantastic way to think about fiscal discipline, but you don't do it by burning it all to the ground, seeing who dies, and then building it back up, right? And the problem is there's no appetite for the hard work of actually rebuilding the system. It's easier to just say, we're going to line item it out and then see what happens.
Matt,
Well, who needs traditional banking when you can have private credit? I mean, like these are just clear and obvious problems that you just see the solution just written there. My big takeaway was no changes. That was like my big takeaway was there's nothing glaring here, and we're signaling to business owners with this policy that we're not going to screw this up until we have to figure out how to digest tariffs through this whole system. The undermining of the social safety net and all that stuff is just, I want to say kind of expected. Like we knew some of this chaos was going to come in, and we just have to
Yeah,
figure out how it
none of it's
evolves.
surprising.
None of it's surprising, but the wild cards in here are like the business and manufacturing incentives and stuff like that, where it's okay, I'm going to give this
and the
person-
research side, like the research stuff is legit, and some of that is part of this bill, and some of it is just part of other actions the admin's taking at the same time. But the idea that we're getting out of the federally funded research business unless it aligns with an individual administration's policy, which is exactly, those are the words that they have said, has to be in alignment with the administration's policy objectives. That's a really weird way to run a country and an economy. Again, I think reasonable people could disagree and say, the federal government should not have anything to do with R&D. Okay, but we haven't really set the world up to deal with the and thus of all of that.
Isn't every business just looking at that and going, how long does this realistically last, even if they get this all the way in? Like, what's the game I have to play today, and what's the game I have to play?
Oh, I don't know. I know
3
way
years?
too many people who've actually been fired in the last 3 months. Like, I know a lot of people in science and academia who just don't have jobs anymore. So, like,
that's
it's
the
real.
horrible.
It's,
Yeah, that part's real. But if you're the business owner or you're the person like on this, even if you're a beneficiary of this in some way, so you're not the person who lost their job, and it's not. I'm not talking about them for a second. I'm talking about the person who's sitting at the top and making the R&D decision for the company or thinking about how to position for this. Are they looking at this realistically and saying this is like a 10-year plan? Or is this just like, well, this is the change I have to deal with in the next 2 years, and God only knows what happens after this?
Well, the cascade consequences are like you had the whipsaw effect too. Like if they just sit on their hands, right, and everybody sits on their hands, then you create these bullwhip effects to the R&D and inventory and the supply chain. So it does create an effect, even if it is like wait and see. Sorry, Dave, I interrupted you.
Right.
Yeah, I think the question is, what kind of business are you in? Because if you're in a high tech business, if you're in a pharma business, if you're in a biotech business, if you're in a business we would associate with innovation, then this is a very real and immediate thing, because you need postgrads to show up and do work for you in the summer. You need, you have actual needs from this research cadre we have now basically dismantled. If you're the guy at the restaurant, sure. I think it's very easy to say, well, maybe the tariffs will impact me, maybe they won't, but this tax bill is a nothing burger. Okay. I think there's some long-term implications, but we're not going to know for years, honestly.
But at the same time, I wonder, like, I think, correct me if I'm wrong, we'd all agree in the sense it's like, funding for vocational schools inherently a good thing, right? Like, and then STEM research inherently a good thing. But it comes back to like, where does that get spent and how does get that paid for? So it comes back to the fiscal house in order question. And that's what I'm trying to reconcile in my own mind generally is like, everybody wants these things. But then people are arguing about which parts of the bill they want versus what they don't want. But everybody still wants to spend at the end of the day. And then I guess in the rubric of the way people think about fiscal house in order, that's what I'm trying to understand is like, is the idea you would want tax income and bond income to equal federal spending? That's the general idea. Like it should neutralize, or should it pass on its way, swinging from side to side?
You put in the income from selling bonds, that is what happens, right? We don't literally run a negative balance on the accounts perpetually. We fund it by selling securities, right? So we do that. The question is, how much of that bond selling and servicing is an appropriate activity for a government versus a household or a company? And look, I don't have the answer to that. I'm not the national economist of note or anything. But it does seem like that is the fundamental question, right? At some point, you have to be talking about what you spend on things, and you have to be talking about how you fund them other than floating bonds. Like, I don't think floating bonds is a great perpetual long-term strategy for funding anything.
Well, yeah.
At some point you have to pay.
Well, I don't personally, I don't think I think the government prints money. I mean, that's generally what we do. And to me though, like the double entry bookkeeping of it is like government deficit equals private savings. So to reduce the government deficit, then that inherently causes austerity to the private sector, to individuals. And I'm not sure people are willing to take that pain. And
we're just doing it very regressively, right? We are saying that we're going to establish pain by pulling people back and making them shrink their economic footprint. We're just doing it for poor people, right? That's what Medicare cut is doing.
That's what I'm saying, unnecessarily.
Absent all the waste and whatever that you think you may be getting out of the system, the target at the end of it is, yes, there is a class of people who is going to have to tighten their belts. We're saying it's the bottom quartile versus other ways of doing this where you could say it was the top quartile. But that's only, that's sort of only part of the picture. I think part of the issue that I think you're hitting on, Jason, is just the numbers don't work, right? You can't cut enough from the things that can be cut to make up for the amount that we don't want to spend, like as individuals on our taxes, right? That's the fundamental disconnect, is that we have, through our collective bodies, decided we don't want to pay for the things that we want. So therefore, we're going to borrow to get them.
Which is human nature, right?
And Godspeed doing that.
Yeah. Which is historically why I think we always had jubilees, right? If you were truly on a fixed exchange, right? Like humans are going to keep borrowing. They don't want to have austerity. And then eventually every 50, 100, 150 years, you have to have some sort of jubilee where we burn the tally sticks. Because otherwise, like what's going to stop us from doing so, right? Like,
well, that's a great pivot. That's a great pivot. Do you think all of this crazy shenanigans has actually impacted our role on the global stage? Like, I mean, we've been exporting finance to import goods for a long time. There is a narrative out there that we've now blown that up because of this incoherent trade policy, and that, the U.S. is never going to be the reserve asset anymore, and nobody's going to want dollars, and we've spooked the bond market, and that seems to last for about 48 hours, and then we come up with a new story. But so do you think there's obviously some truth. Currencies are currencies, and you can look at them and see that ours are down. But do you think there's any real long-term impact as an investor, as a guy sitting there on a cockroach portfolio, trying to navigate people through this craziness? Do you think this is just noise, or do you think there's been a real impact on America's cost of capital?
Well, you asked a couple questions in there. I'm going to ignore the cost of capital one because I'm not sure I believe it. That's the cost of capital because actually I'm not going to ignore it because at any day now, like the Fed could set the rates to zero. Like, I don't understand this argument. There's no point to this argument. And they were always saying like our spending is getting out of control. And now that these rates, I mean, it's UBI for the rich. Like you could set the rates to zero and we'd be just fine. And then like, who's going to buy our bonds?
Wait. You could set the rates to zero, but you still have to sell the bonds to somebody, and they trade at a discount. And that's why you end up with 5% 20s, right?
Well, I think the opposite. I think we should actually charge. I think because in large trillion-dollar scales, where else are you going to put capital or assets to the work that are safe? I think it should be like banking, the old school banking. You should be charged for your deposits at the Fed if you're a foreign government. Like that's just, I mean, I know this is lunacy fringes, but like that's the way I see it. Like they could set the rates to zero, and we don't need bonds to fund the government. But going back to your question is like, does this reset our hegemony or Pax Americana? I don't know. I think all that stuff's kind of blips, and we won't know honestly for decades if possible, right? And then the question is always like, what are the alternatives, right? It's always a relative value game, and it is like you're saying. It is interesting to see Europe reset a little bit, do defense spending, R&D spending, etc. So maybe that is resetting the board a little bit. So that does give you pause for concern. But at the same time, as you know, the technology race is an AI race now, and that's. Silicon Valley is just, running away with it. I'm sure you guys kind of saw the Google I/O stuff in the last few weeks, and then, Claude coming back out against them. It's just that race is kind of never ending. But there's something else in your question. I'm trying to remember about that. Does this reset us or not? I'm either way. I'm not so certain. The whole point is too about any sort of empire, right? Like the one. How should I say this? Dalio's books about empires fall is a tautology of no shit. Like empires do fall, but can you time that empire falling? No. And I don't know if we're resetting for another century of American exceptionalism.
Totally agree. Timing's a bitch. Yeah, I get that. It does feel like we live in a world where these things seem to happen faster, right? Like cycles do seem to, run through. I mean, we now have a market crash of the last 4 days,
And then, by the way, specifically, now I remember to specifically answer your question before I pass it to Matt to get us back on the rails, is though when I do think about what you can do or how do you do, we prepare, we don't predict. And if you think about commodity trend following strategies, right, they're essentially, for the most part, short dollar, right? Because you have that inverse relationship between the commodities and being priced in USD. So that's the way I think about it. So am I that concerned? Not really, because that's part of my portfolio, but the rest of my family and everything may have, 60-40 portfolios. But then again, the question is then, are they going abroad on trips, and what will be the cost of those trips? If we do have, the dollar break. So Matt, please get me out of this hole that Dave put me in.
The only thing I'll put you out of the hole with before I just do two things I always say when I'm talking to clients about this stuff is it's like, yes, there's a scenario where you run headlong into the wall. And sure, every empire, every country has the chance to run full speed into the wall.
Yeah.
But what will usually happen when a person is running at a wall, if they have any awareness of the wall itself, is at the last second they will turn. And you will now be on a very different track than the one you're initially on, but you can slow down, turn, you can kind of hit the wall, bounce off, spin around sideways. It's not a graceful thing, and nobody knows what exactly is going to happen or how close you're going to get or whatever the mess is going to be, which to me goes back to the kid playing with the toy analogy. We don't know when it's going to break. We can yell at the kid and say, you're going to break it, and then you're going to be mad. But how many times does a kid break a toy and then figure out how to play something else with it? Or decide like the toy was actually boring, but this box is awesome.
Well, but that terrifies me.
It is terrifying because there's no social safety net or whatever everything else breaks.
Right, because this isn't a toy. This is people's lives, right?
Yes.
That's why it's scary, is because, yeah, it does feel like we're a giant experiment. We're going to see what breaks and what thrives and what flourishes and what, plummets and real people get hurt.
But do you think that's,
these are the...
to Matt's analogy though, Dave, do you think that's a postmortem? Like, right? Like we just had things break. We have that punctuated equilibrium, and now we have a new regime, and then maybe we'll have stability in this regime moving forward. So we're almost like, and yes, I mean, inevitably people do suffer and get hurt. And I'm not pro any of that, obviously, but like that, maybe we're talking about that shift has already happened, and now we're finding this new punctuated equilibrium. Is that possible?
With a whole big argument for like the deglobalization stuff started post-financial crisis. So Brexit, 2011, 2016, somewhere in there, the deglobalization starts. It didn't hit America in the way it hit America until this phase, but is rippling through Europe, China, Russia, and all those things leading up to this point. And maybe we're just in this stretch of chaos around solving that before the next piece. Peter Atwater said this the other day. There's an interview with him coming out. And he basically said FX is a sentiment gauge for all policy decisions right now. He's like, it's not going to get you out of trouble or get you out of Dodge. But if you want to see how policy is actually being viewed on the global stage for resetting cost of capital, just watch FX on the announcement. Like, watch the policy come out, see how FX moves, and you're going to find out how spooked the politicians are about to get about their policy or lean into it. And the more it goes against them, the more they're going to course correct. And the more they're like, the ground shook, but we're okay. They can decide to stick to it or not.
Well, part of that is like,
because that falls through everything.
Vol doesn't get like transformed or transmitted, right? It doesn't go away. It's like a balloon. And like the whole point is like FX has been so boring for like the last decade. So maybe now that's where we're seeing the volatility on FX.
And now the dollar's down 12%.
Right. Like the volatility kind of shifts to different asset classes as we play this whack-a-mole game around the globe. But also, Dave, I wonder part of your question too that I was thinking about. I don't know if you had a chance to see the Resolve Riffs with Julian Brigden, but one of the things Julian brought up on it was like, if you're my wealth manager and you say, well, your S&P portfolio is up on the year, but you're down 50% globally because the US dollar is down. He's like, well, you incinerated my money globally. And I'm like, is that a wealth manager's job? So maybe that's the question I have is like,
a wealth manager's job is always to incinerate money.
Let's just be clear.
Well, no, but yes, because, well, my theory of wealth management, my theory of investing is always that the use case of the asset, of the wealth, is actually what's important. Like everything else is a path to get to that point. So if the point of my wealth accumulation is to have a lot of money to hand to my kids so that they can buy houses and stuff, and all of that's going to happen in an intradollar world, and all of my liabilities are going to be with the dollar, then the wealth manager's job is to ensure that I have sufficient dollar resources to meet these dollar liabilities at some point in the future, which is part of my complaint about the Bitcoin thing, which is like having assets in the currency in which you have obligations feels like the right call. Now, the big challenge becomes how deglobalized can we get? Because the answer about you've incinerated my global wealth, that really matters if we're still in a world where enormous amounts of our products and services are being imported from other currencies, because the implication would be all of a sudden our costs on all those goods have gone through the roof. All right. In which case, all you've really done is just inflate yourself. Right. So, then you have to talk about real versus nominal returns on your S&P allocation.
I fired my wealth manager in 1933 for his German allocation. I mean, I'll never forget. I never looked
But
past.
that's what David said. Like, I feel like most wealth, I'll confine it to RIAs, and maybe I don't know what Julian was referencing as wealth manager, but I was like, you're asking a whole lot. You know, like you're saying, if you have dollar liabilities, you should be just worried about the dollar. But I understand what he's trying to say. But I'm like, you're asking quite a bit, especially if it's just like an RIA, you know, managing personal wealth. That I thought that was just asking way too much from a quote unquote wealth manager.
But let me push back on that. Like the reason that my financial advisor recommends that I have X amount in international stocks isn't because we're trying to hedge against the dollar. It's because he thinks in dollar terms, they're going to go up when other things go down, or they're going to give me access to higher levels of returns when the global economy is nominally growing up at a little bit, right? Which are reasonable things to say for somebody trying to build a portfolio. It is a different thing than saying, you know, I have a house in Spain, so I really should have some euro denominated assets because I've got a lot of euro crap I'm going to have to spend over the next 20 years on this house.
On the planning side, that's the reality. If you're talking to people who have multi-regional wealth, then you plan that way. If you don't, then it's a different equation. And I've worked with a bunch of those families in the past where you have to think about those things in terms of, you know, cross-border assets. But for most people, that's never a part of the equation. And what really just becomes a part of the equation is, what do you want this thing to hold value for down the road?
Right. How do you make number go up?
Yeah.
How do you make number go up?
I've
And with that weird,
go ahead, Matt.
Go ahead.
I've
international diversification. Yeah, we're just going to keep doing it. Let's keep doing
No, you go. No, you go. No,
No, you go.
No, you go. No, you hang up. No, you, man, remember those? By the way, remember those old clear phones that we used to have? Like, did you ever have one of those? Like when you were trying, like, anyway, I think I saw that one in a film the other day and I was like, oh, reminiscing about that clear telephone.
With all the gears and
yeah, that was like, that was part of my, that was during my you hang up stages of courtship. To totally change tact on us, I had two questions today. One's a little more fun probably than the other one. But one actually comes from...
These are surprise topics?
Yes.
We're in surprise topics?
Yes,
all right.
We're in surprise topics.
And one comes from... Dave did a great show recently about exchange funds and into ETFs. So I highly recommend going see on excess returns. And, you know, always Alpha Architects is pushing the forefront. And I hadn't really heard of the guys from Cash, so that was great because I do work with clients that have concentrated positions and we're always trying to figure out solutions. But Dave, there was like some basic stuff I didn't understand for exchange funds that I hope you can help me with. Like starting with that even, and by the way, and Brent Sullivan's blog, what's the exact name of his blog?
Tax Alpha Insider.
It's so good. It's so good.
He's the best.
He's amazing.
Yeah.
He's amazing.
But I read all of his stuff too, but like there starts with the real basic one I don't understand about exchange funds. Like why do they have real estate in them? And why do they have to have real estate in them?
Oh, they have to, because 20% of it has, in order for it to get the treatment that it gets, in order for it to exist, there's certain like pieces of the code that you have to match. And one of them is you can't be doing this for the purpose of diversification. And that's a problem. You're trying to do this for diversification. Your get out of jail free card is the other piece of the code, which says you also, it doesn't count as diversification if more than 20% of what you're invested in is illiquid. And so real estate has been the historical easy bucket to go shove some like privately traded funds in. And they say, well, that's my real estate allocation. It's a liquid. I don't have to worry about the marks all the time. It is different than everything else that's coming into the portfolio because nobody's contributing real estate to an exchange fund. They're always contributing some sort of securities, right? So that 20% real estate bucket basically is the minimum you can have to get away with the rest of it.
But it could be anything illiquid. It doesn't have to be real estate. Or...
It could theoretically be anything illiquid. I did check in with them on that. So it could be, for instance, a giant slug of private equity. Now, the mechanics for these things and the sort of expectation is you're getting a 20% real estate allocation. And I think for most investors that are coming in with a 7-year time horizon, because there's no getting around that, having a 20% allocation to some private real estate isn't a terrible idea, right? It fits into a part of their portfolio already. It's a good place to put those kind of assets because you know they're locked up for 7 years. So you can actually take out, you know, some piece of property that's going to throw off amazing lease yields because you've got 7 years to collect them.
Well, it also seemed like to me, like the real estate industry helped lobby and pass, right? Like, no, yeah, you have to put 20% of this bucket, you know, to work.
Yeah, no, I'm sure Trump isn't going after this one.
Yeah, exactly. The other,
brought to you by Cohen and Steers, your lobbyist friend.
The other one you did was the 7-year time horizon. Is then my understanding then that's almost like an opportunity fund is like you still have your basis. You're just kicking the can down the road that you don't have to pay taxes on that original basis.
There's no tax. You're not washing anything, right?
Right.
So if your tax basis that you're contributing is $1 million, then you carry that $1 million tax basis on the exchange fund that you get, and that still gets prorated when you eventually start getting delivered shares of like Wes's ETF that comes out of that, right? So that tax basis carries through. There's no magic, there's no magic step up.
But then
so
if you held
it's
that,
not magic, but it's pretty functional.
are you forced to redeem after 7 years, or you could just hold that diversified ETF indefinitely and then maybe take the step up basis at death?
There are automatic distributions as soon as you reach a certain point, and I think that's required. The way it tends to, you get in-kinded out of the exchange fund is usually how it works, and that's how you keep your basis.
Okay.
So part of the whole point here was way better to get in-kinded out one diversified ETF as opposed to 350 securities and a slug of private real estate.
And then generally, even if you were diversified, I mean, that was interesting. Cash is, you can do it with, I guess, it's still diversified. They're just agglomerating the diversification at cash versus like, and so it's middlemaning it, so to speak.
And then,
yes,
but on a regular basis, they'll convert some of the idiosyncratic portfolio of securities plus real estate into shares of the ETF, because as ETF Architect launches new tranches of this 351 conversion fund.
and then you actually, I think we're alluding, you started to ask this question in that show, is like, tell me the magic of how that works. It's like you take these assets in the exchange fund, you're slowly transferring them over the 7-year period into a diversified ETF, or maybe in the first year. But what is that? You're posting collateral, and then you're using the create redeem mechanism inside an ETF to start.
Oh no, you're just literally doing it. So like the exchange fund will collect securities.
Yeah.
You've got extra Raytheon, you've got a bunch of Walmart, I got a bunch of Lockheed Martin, whatever it is. And they keep track of like, we have like, if you coming in with Lockheed Martin, you can put all you want in. If you're coming in with more Tesla, we don't want any, right? So they have to gate a little bit who gets to come in with their over concentrated position. So you can imagine, I mean, they do these every 2 weeks. So they do 10 or 20 of these cycles of new onboarding. They now end up with a portfolio which probably looks like the S&P 500. I mean, it's going to just be a mishmash of stuff that came in. They manage that on the way in a little bit so that it doesn't get way out of whack. And then whenever Wes has an opening to launch a new exchange fund, the whole fund becomes the creator of the new fund, the new ETF, and they in-kind out all these positions. And so now Wes's fund, the ETF, ends up with this giant basket of stocks, which they can then, through heartbeat trading and through the normal course of business, tweak back down to a core diversified portfolio. So they get rid of why do we have 14% Lockheed Martin in here? Well, okay, we win, that gets tamped down through heartbeat trading, and it slowly becomes the diversified U.S. portfolio again.
Your what was it? Unreported tips earlier to me is the heartbeat trading of ETFs.
I was looking for it.
It's the one I've never understood how that's legal, but that's these things are way beyond on my pay grade.
And luckily it probably will never become illegal because it's really based on farmers. And there's one thing we do in this country, and that's don't pass laws against farmers.
Wait, you're gonna have to tie that together for Matt and I.
In-kinding, man. You and I, you got a farm, I got the sheep.
Everything with estate planning. Yeah, it's basically based on farming, as I learned a long time ago.
It's all based on farming. If we three of us want him to start a farm, I've got land, you've got sheep, he's got equipment. We need to be able to put that in an LLC without it being a tax.
I don't report my sheep, sir.
Those are alpacas.
Unreported sheep tipping.
Those are my tax.
Cow tipping, not sheep tipping.
My tax deferred alpacas. So related to that though, Matt, maybe you can help me with this. Is like, correct me if I'm wrong, I'm seeing a lot of either the tax loss harvesting stuff or like these 351 exchanges. Are you seeing more and more clients that are, one, looking for tax mitigation strategies, or two, which I think at least, when I was, most of my life, kind of domiciled on the West Coast, is like, I'm seeing more and more people having these large concentrated positions because now the new Ford factory, right, is working for a tech company in the Bay Area, and you just have a dominant position in your portfolio.
Yeah, you're working with tons of people where you're working around the problem of like, you have this hyper appreciated asset, and now what do you do? And then it used to be anytime I would talk to somebody going into like just the from working to retirement, whether that's traditional retirement, like you're a teacher retiring, or you're a tech executive and you've got a bunch of concentrated stuff. And it's like, listen, your job basically in this phase transition is a whole new mode of just tax planning. And that's really boring. But most of your returns are just going to come from tax planning going forward. And I think what we've seen over the last 10 years, especially with what you just said, like the Ford plant became, I work in an Amazon warehouse, and now all of a sudden all of my net worth is an Amazon stock or something. And now for that guy who was just a foreman 15 years ago, but now has all this stock and equity and whatever else, and it's concentrated. Okay, now you're a mid-career person. If you're a mid-career executive with concentrated wealth, it's all tax planning again. The products, the index stuff is like out the nose. Everybody and their cousin has one of these products that they're pushing on us. So you get endless solicitations for look at our like direct indexing strategies and that stuff. And some of them are great. A lot of them are good. And there's definitely a bunch of like crap with people trying to pile on. But at the end of the day, the real thing is just everybody needs more advanced tax planning, and you're not going to your CPA for it.
Whereas portfolios became more commoditized, it was obviously that estate planning was the path forward, maybe like in that.
And I would go so far as to say the portfolios got commoditized. Estate planning was the obvious, that'll be what the alpha was, but it really wasn't estate planning. It was tax planning writ large across the entire life cycle. And that's still a huge hole that is, I'll stake the rest of my career in that business.
And talking to other advisors, the folks that have figured this out are the ones getting new customers.
That's
like I have talked to both. I've talked to advisors on both sides of that. Firms that have legit, well-established tax planning practices, do their clients' taxes, have a tax attorney on call. Those folks, they're just pulling in clients every day. The folks who are like, yeah, I can give you a referral to my friend Bob, who's a CPA, they're losing clients. Like, because that's not enough.
So basically,
and that's the difference is tax prep versus tax planning inside of those two. Like you don't have to do tax
prep, but firms that do often have the rest.
That's a big thing. And if you can do at least tax planning or tax planning and prep, that just becomes such a huge driver because you give a lot up in taxes and you have a lot trickier problems if you have concentrated wealth.
Which obviously like AI and bots help for, but then also like now that you have this term popping up, VFO, like virtual family office, that's essentially what an RIA is becoming, right? Like, a virtual family office.
Yeah. And you'll see more and more of that, inevitably, because of those. The other thing we love to say about family offices, if you've seen one family office, you've seen one family office.
I always like that saying, but
but a lot of the services, like, I mean, things that people used to lean on a family office for, like trust services or signature loans or managing multiple properties or recalcitrant teenagers, those problems are largely getting solved through fairly commoditized products now, aren't they?
Yeah, off-balance sheet alpaca sales. I mean, they're through the roof as we know.
I'll finance them for if you want. I'll make a market.
There's got to be a crypto angle on that.
Leasing the socks, baby.
Exactly. To put them on the chain. So the exchange funds were my fun question. My serious question is, when are we going to put any sort of restrictions on the exit row on planes? What is this willing and able bullshit anymore? Like, I was just on a flight. This woman was 82 years old.
People to do push-ups?
She was 82 years old. Couldn't even put her purse above the thing. I was hoping, and she said willing and able. I mean, what are we doing here? What are we doing?
Did you stand up in an act of defiance and call her out as an American citizen? Did you yell at her?
Have you ever been in a plane that actually had to be evacuated? I have not.
No, I have not. But I asked the flight attendant. She was just basically like, we can't discriminate against anybody. So if they say willing and able, we can't do anything about it.
Is that what the rule is?
Yeah.
Well, I mean,
so
to some extent, how are you going to prove it? Are you literally going to make people do push-ups?
I know, but like, come on. I mean, there could be like some restrictions, but I mean, I guess in this, I don't know, what do we call this? Like, when the president can be a certain age, I guess anybody in the exit row could be a certain age.
I mean, the boomers won't let go of the mic. They won't let go of that exit row seat either.
Unbelievable. That's a great question. Dave, who's going next? Me or you? I got trivia questions for you. So
you go first.
Derailing everything. All right, good. You can land us in a healthy place.
This is like.
Well, this is more directed at Dave and not you, Jason, but for our amusement. So you can enjoy this with me. I assume, like, I play Fantasy Premier League the same way you play Dungeons and Dragons in my mind. So we're going to this one. I got a staggering response And by staggering, I mean like 4 people called me out on this one when I wrote about the retirement of Jamie Vardy the other week. So first question, Dave Nadig, is Jamie Vardy at all on your cultural awareness spectrum of even what that name is? Okay. Buck, would you, if you want to make any comparison, is there anything you would draw a Jamie Vardy comparison to that Dave might know?
I would try to think of an analogy. You could probably say this better than I could. But David's like, imagine some guy that's drinking pints down at your local pub that's playing for like the rec league on the weekends, somehow then becomes a full top flight Premier League player and one of the best scorers in the Premier League, and still acts.
It sounds like a John Candy movie.
And still acts like he drinks down at the drinks pints down at the local pub.
All right, so let's paint this picture out. Dave, these are survey questions for you. How many Red Bulls do you think Jamie Vardy drank before each professional match?
For God, I'm going to say 3.
Oh, you got that one right. Congratulations. 7 days. All right, on a day off, how many Red Bulls did Jamie Vardy drink? 3. No, he cut back to 2 on his days off, which he has pledged to keep doing through his retirement, which don't know how that works for the old heart. What do you think his pre-match, so night before, how do you think he's prepping for the game?
Oh, God. Push-ups. I don't know. Why are you asking me these questions?
This is the fun part. No, so, Jason, do you know what his pre-night match ritual was?
Carbo loading with pints of Guinness? I don't know.
No, see, it's even better. He would drink port. But he would drink port from basically like a Gatorade bottle from starts with an L. It's a European brand. Lucozade.
Yeah.
He would drink it from which was discontinued in what, 2011? Something like
the bottle coming.
Port.
Why is he? Did he give a reason for the port? Like he thought it had some sort of medicinal properties?
He did it. He won games. He never stopped.
Oh, yeah.
It sounds like a Winston Churchill thing,
exactly.
you know?
It's amazing. From his
Smoking
Lucozade
cigars in
bottle.
the bathtub.
Yeah. All right. Let's go to when he signs his contract from Fleetwood Town, which I'm sure you visited Fleetwood Town a great many times on your visits to the UK. How much was the first contract he signed when he joined Leicester City? Guess the massive dollar amount of this contract. That
$50,000.
Yeah, pounds. He did land a million pound contract from Fleetwood Pound. I think his salary though was pretty disastrous.
I was going to say that was a transfer fee, right?
But
what was his salary? Like a few $100,000 or
Yeah, it was something staggeringly low, and then they gradually upped it to like $30,000 a week, I think, after he won the title. Okay, his odds, the year Leicester goes on to win the championship, and there's actually math behind this. You could probably reverse engineer this, but what do you think the odds were that his team was going to win the championship before the season they won?
1 to 30.
Yeah, 5,000 to 1.
Oh, Jesus.
5,000 to 1, and he won. All right, just a few more because they're fun. On the last day, Jason, do you know this? What goal he scored in his last ever appearance? What number goal?
Oh, it was his not 100th goal.
And this is tricky. There's two beautiful round numbers on his last appearance.
Something like his 500th goal in total, but it's 100th goal for Leicester or something like that, or what was it?
200th Leicester goal in total. And how about this, Dave? You'll just appreciate the serendipity of this. 13 years to the day of his signing, he plays his last game. He plays his 500th appearance in the jersey.
That's what, okay.
And he scores his 200th goal.
That's pretty great.
Friggin' amazing.
There's a level of manifesting there. Don't tell me that the world is logical.
Yeah.
The world doesn't have to be logical. It's a beautiful thing. I want to shout out what the people gave me crap the most about was the incident with Colleen Rooney, which, do you remember Wagatha Christie, Jason?
I'm not getting involved in this. You can deal with this on your own.
Nothing.
I could deal with this. I was like, I dodged this in writing about it for the Cultish Creative Post, and then I got all these emails back. We're like, how come you didn't mention Wagatha Christie? And I'm like, you guys are sicker than I am. The best part about this thing, which was an Instagram trial, basically, that you can read the 300-page court document for the libel lawsuit that this resulted in. It's amazing. My favorite detail is the agent that Rebecca Vardy had to push back on in the lawsuit. Do you remember what happened to her phone with all the WhatsApp chats on it?
Mm-hmm.
It fell off a boat. It just fell off a boat.
Fell off a boat.
And disappeared and lost all the evidence of the WhatsApp chats. So in the great tradition of this, I just have to ask you a last question for you, Dave. If one was to chat shit, what would happen to a person who chatted shit in the parlance? Jamie Vardy.
I think you'd get smacked.
Oh, we're close. We're close. The famous tweet, chat shit, get banged. Which is still my favorite tweet of all time.
Straight get banged.
Matt, you also
I had a much.
You also remind me of one of my favorite things about the UK and a lot of times in Europe is getting wages weekly, paying your lease or rent weekly, and then also usually quoting your income after tax, which obviously we would never do such a thing in this country.
We would never do such a thing.
No,
but maybe we will.
It would sound
Maybe we will after we convert.
Weekly after tax sounds way too puny.
God.
It's not a big
Insulting.
Yeah, it depends whether you're trying to be performatively poor or trying to be braggy.
Exactly.
Hey, this is America, sir. All right, Dave.
All right, my dumb questions were much simpler. So I recently snagged tickets to go see Nine Inch Nails, a band very important to me that I have never seen live, and they're playing at the Garden. And then I had that moment of pause where I was like, is this band too old to see live anymore? And my question for you guys is, I've had the experience of, I saw The Who. I should not have seen The Who. It was a few years ago, just to point out, like, it was very recent and it was a very big mistake. And it kind of ruined Pete Townsend for me, maybe forever, because it was so bad. Are there any bands that at this point you'd be like, love them, too old to see?
So first off, I think I would still go see Nine Inch Nails. I think they could still pull it off.
Yeah, I mean, Trent Reznor's my age. He's
I
gonna pull it off.
have faith in Trent Reznor. I will also say I was watching Flag. Do you know Flag? Dave, you might know Flag. I was watching a video of Flag playing at some like punk rock bowling festival or something. Keith's turning 70, I think, in a few weeks or a few months or something like that. And he was like slaying on stage. And I was like, this is amazing. I also saw the Stones on the Bridges to Babylon tour, which I think they would have been at my line of questioning that at that era. That was mid to late 90s somewhere. And like I can't fathom how they're still going now, but that they were incredible on that tour. And I remember being like, oh my God.
Have you had the opposite experience where you've seen a band and it was like, this was a mistake?
Yes. And I'm blanking on, it was like a Motown-y era act. Maybe it wasn't Love and Spoonful. It was something
on Warwick or something.
No, because I've seen the good side of that too. I saw Percy Sledge a few years before he died, and he sang the shit out of When a Man Loves a Woman, like stopped dead in my tracks. I accidentally saw him at a state fair, but it was wonderful. But I saw somebody where I was like, oh no, this is embarrassing.
Yeah.
I also I saw Casey and the Sunshine Band. I think it was his 74th birthday. It was embarrassing for him when he was doing kicks and stuff on stage, but like, it was shockingly good for what it was.
Okay.
I don't know. I think it's original act. If it's all the original members and they're all in different states of decrepit, I'm going to look at that. Like The Who, I'm going to look at and go, I don't know. The Rolling Stones, I'm going to look at and go, I don't know. Like, I want to know you're still on drugs and fired up in the right ways, depending on what you're doing. What do you think, Jason? Where are you drawing the line?
Singing Happy Chinooka with that was for Matt.
Happy Chinooka.
Do you ever? Tell me you've seen that like cameo from. Thank you.
Yes.
This actually is top of mind for me, Dave, because I was just at Bottle Rock Napa Valley this last weekend, and usually because of the age range there, it skews a little bit older. But I was actually also not too long ago, I was in the Bahamas, and they had Rod Stewart was there, and he was 73, and I was like, this isn't going to be good. But he was strutting and peacocking around. I mean, it wasn't bad at all. But when I was just
how old does that make Maggie May now?
Yeah, it was just like, I mean, but he was up there for like, and Bahamas, he was up there 2.5 hours. Like, I was just like, not taking a break. I was shocked. But then, because I was sending Matt text because so there's a Bottle Rock one. I was like, Sublime, which I was surprised by. The front man, is his son now singing, which was an interesting way of re-upping it for the next generation. Is like having the son is the front man now, and I was like, these songs are actually kind of so perennial that actually works. It could come back around for like Gen Z or Gen Alpha, maybe. And then the headliner that first night was Green Day. And I'm like, these guys have got to be in their 50s. And they crush for like 2 hours. And
Green Day is amazing. I saw them 2 years ago.
That was unbelievable. So like usually at these like kind of festivals, they have a lot of the older acts for the nostalgia branding. Correct. And so far, I haven't seen one that was that embarrassing. I'm trying to think at the Kentucky Derby, they always have this concert, like what's it called, like the Brown Stables Brown, and they always have like a lot of older acts. And I didn't see one that was like that nothing's like really disappointed. I guess can live music ever disappoint? By the way, you know how you guys are so much more musical than I am. When I hear Trent Reznor, I'm like, oh, you mean the guy that does the movie soundtracks?
Oh yeah, that's where my brain went.
Composer.
Like so many.
Him and Atticus Ross.
Him and Atticus,
They're the best.
They're doing God's work out there.
I mean, you're not wrong.
No, they're
That's a great
amazing.
soundtrack. Love his stuff with Atticus Ross. All right, that was my fun question. That's what I got.
So what
Well,
have you
if
seen
nothing
anybody?
else-
So you got to flip it on you. Have you seen anybody that you were
Yeah.
like, this is
Well, The Who was really disappointing, for sure.
Have you been surprised in the other direction too?
Yeah.
Like,
Yeah, we saw at Boston Calling last year, like it wouldn't have been on the top of my list, Alanis Morissette.
not surprised. Not surprised.
I mean, she was so good. Like, belted, like, didn't need an amplifier 200 people back, just belting across the entire place. It was amazing, shockingly good. So, in general, I'm positive on those things. We're going to an 80s one-hit wonder concert later this summer with like Soft Cell and Modern English and like all these
I think
new
we
wave
looked at the
bands.
tickets to that one.
And
Go
the
into
tickets
that.
were not expensive.
Right. Because that's we're going to get you back together for this tour, which is
Right,
that's
and
usually
we've done a
dangerous
couple of
sign for
those
me,
where
too.
like the band comes out and they plays the 3 songs everybody knows, and then another
Right.
band comes out and they play
Yeah.
the 3 songs. And sometimes they're great, and sometimes they're really cringy.
Yeah,
Somebody who's getting cringy in my old age.
the embarrassing one that I'm thinking of was like one of those. It was like a Motown Whoever's Still Alive tour in the 90s, and it was like it was the backup band, and then they'd bring out like the act for their like 3-song
it.
medley. And there were a few of those where you're like, why did you need this check? Like, can we just give you the money and mail it to you?
Yeah.
Maybe don't embarrass yourself. I've heard a lot about Bob Dylan in the last few years of people who are like, you should pay yourself not to go.
Oh,
which is sad,
That's what
but-
I'm fearful of. Like, I wouldn't want to see Bob Dylan be bad.
No, I don't have the heart for it. I'd rather
Yeah.
just skip and go watch YouTube videos of him or something. All right. Well, in the interest of nepotism, remember to tell your children out there, don't practice Santeria. And as an old folk, you can practice Santeria. I think that's the note I'm taking us out on. Dave, Jason, thanks for joining me.
I don't practice Santeria. I ain't got no crystal ball.
I'm making sure Jack leaves that in.
Now it's stuck in my head.
There it's going. It's over now. You
You
sang one of the
asshole.
songs. It's all downhill from here. We're out.
Thank you for listening. If you enjoyed this episode, please like and subscribe and tell a friend. Matt Zeigler is a managing director at Sunpoint Investments. Jason Buck is the chief investment officer at Mutiny Funds. Dave Nadig is an independent financial futurist and hopeful ETF expert. No information in this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of the hosts or their clients.